All right, let's get going. This is Jeff Scott, and welcome to this week's top-down review using HGSI as my core tool. Today is still in the East Coast, March 31st, 2013. It's about 10:34 p.m. And for those who would like to reach out and contact me afterwards or at any time with any questions, there's my email address. To those who I met at the recent Anaheim Greg Mills / George Lee annual meeting, welcome to the review. For those that are recent purchasers or considering purchase of HGSI, I offered a 25% off, or I was able to get a 25% off offering. So anybody that contacts me that's a new user, whether you're at the Anaheim meeting or not, I'll be happy to pass that on to you and get you going with the program. My email, mdonc@mindspring.com. Disclaimer, this is for educational purposes only. Anything I recommend is for education only. I'm a doctor, not a broker. And if you know any physicians, you know we're horrible investors. And despite the fact that I'm definitely a homer for HGSI, it's because I've been a long-term user and purchaser of the product, not because I own it or make anything by your purchase of it. And so I'm not affiliated with any software vendor or trading company. Anything I demonstrate are my own tools that I have paid for and that I use in my daily trading. I think I forgot to cover up my desktop, so you will see when I leave the PowerPoint that I have a zillion programs. I don't need a zillion programs. I need a real-time charting and trading platform. I'm sort of struggling here. I love both of these. I prefer Thinkorswim because it's free. I've had less quoting issues and less times where I've been kicked out of the program with Thinkorswim. Problem is I made a pretty big investment in TradeStation, so with different indicators that I've had programmed strategies, so probably stuck with both. I use HGSI for my analysis. I use EdgeRater to test some of my thoughts in HGSI, plus to give me a great picture of the market. I do like seasonals, but I'm not going to go much more than an hour tonight. It's 10:36 here, and if I have much time after my review, I'll go into Magenta. And then Woodward and Brown, or Ian Woodward and Ron Brown, they're really the brains behind high growth stock investing. Now, for clarification purposes, HGSI software is a separate corporation than Woodward and Brown Investing. Where they come together is the software has been designed to, in addition to meeting any other specific needs you might come up with, but has built in a lot of indicators to match up with Woodward and Brown. They provide, at no cost, a weekend review, which I'll show you where to find in a blog, and at modest cost of newsletter and daily market updates. One of the things I learned from Ian, who's the guy in the picture on the left, is that you should not rely on gurus. You need to be your own guru, and so to me that meant to read a lot, go to a lot of seminars, and learn my own style, which I talk about here. And I learned from some great people. I learned from Alexander Elder with a series of books. I learned from Van Tharp with his books on position sizing and money management. My candlestick person that I like is Steve Bigelow. William O'Neill wrote the Bible that most of us have read and will continue to read on a regular basis. And Morales and Catcher took the O'Neill discipline and took it on, added speed and just huge returns. These are Ian and Ron, which I'll talk about more. Some of the websites that I go to. Ron Brunke is a great guy. Product for learning how to write covered calls and naked puts as a vehicle for creating income. I often make the mistake and say I'm putting this on my buy list. I don't know what a buy list is. I'm looking for setups. I'm looking for stocks who meet criteria that I'm interested in. And then once the market opens, I'm going to look for triggers. Triggers might be specifically on the stock, but also have a lot to do with what the market is doing in the sector. I want this to be a three in a row, meaning the market, the sector, and the stock all going the same way. So just because I say it's on my buy list doesn't mean I buy it at the open. That would be a mistake. Now, I automate much of what I do, and I use, so you can see Market Gauge, Never Lost Trading, some of the various things that I do to automate my trading. As usual, I'll look at the market from the top down with a few different tools to get my opinion of what the market is doing, show you some shortcuts, then as time allows, look at other programs. Here's Ian and Ron, can't say enough about them. Let's just go into the website real quick. And here's the website. So a couple things about the website. Again, I am a fan of theirs. I am a paid user of theirs. I have been following and using this program for the day it came out. I used a prior program as well from the same proprietor. 30-day trial, no credit cards, all it takes to download. If you do that, email me and I will send you a link to a movie that I did that talks about getting started. An important thing under the Learning Center, there's some PDFs and movies for getting started, but more importantly, add-ons. These add-ons allow you to get your software to look like my software. In addition, there is information about the next seminar, which will be in October. Hopefully we'll get enough people registering that we'll get the seminar. I think it's looking good because I've already had probably 15 or 20 people commit. But if we don't have enough people commit, then there won't be another seminar. Again, the seminar and the software are two separate corporations with two separate ownership groups, and the software will continue regardless of the status of the seminars, and the software has got a lot of neat improvements that I've been made aware of that are coming. Also on the website under reports, Ron Brown's market report. He has movies on a regular basis, mostly talks about how he uses the software. I have some movies here as well, this top-down review, which I've been doing every week now for quite some time. I used to do them live once every 4 to 6 weeks. Based upon a couple of requests, I started doing them weekly, although because my schedule doesn't always allow, I often do them by mano to mano by myself, and then I post them on the web. I post them in various places. I'll show you that in 1 second. Under blog is Ian's blog, and he just put one up talking about where he thinks the market is and what he thinks is going on. In addition, I post everything on YouTube, so if you search by my name, Jeffrey Scott, or High Growth Stock Doc, I think I have High Growth Stock as one, or High Growth as one word. That should bring you to my site, and you could see I am somehow getting, despite the fact I don't market this at all, by the time 2 weeks are out, I usually have about 4,000 views, which is sort of crazy, but like it nonetheless. So, first thing I'd like to do is get an idea of what the market is doing. And I think you all know that it was see, there's too many icons, and let's say hocus pocus, and they can go away. All right, this has been a slow-moving market up with some pullbacks, but has continued to move up despite the fact that a lot of folks have been calling for correction now and continue to call for several weeks. So a couple things to point out last week. This is a thing called the group performance analysis. I had about 40, 50 different groups that I tracked during the week, maybe even more if I add them up here, 80 groups. And I'm able to pretend I bought them all at the close of the market on the 22nd, and then sold them all at the close of the market on the 28th. And then I'm able to compare the groups to see what's working and what's not working. Since I predominantly buy high growth stocks, I like to see the HGS 100 and the IBD 50 outperforming the S&P 500. I like to see the stocks that I'm looking at buying, frankly, outperforming the stocks I had a week ago. And that's kind of what we saw this week. S&P 500 was flat, was up 0.79. So it's up, but not up a lot. So I shouldn't say flat. My current holdings were up 0.43, but that was what I had at the close of the market on Friday. My portfolio on Thursday looked a lot different than it did on Friday. In fact, most of what I had in my portfolio on Thursday were things that showed up last weekend on my buy watch, which you could see was up about the same as the IBD 50, up 1.66. Now, a couple of big winners were, as usual, the best of Woodward and Brown had another good week. These are anywhere up to 10 stocks. Now, I filter them based upon a $5 and 150,000 shares. So I ended up with 5, of which 4 were up, 1 were down. Average gain was 4.47%. So that was a pretty good week for these again. These are some of my favorite filters. On my buy list, I try and break it down into different things, but pullbacks ready to run would be a stock that pulled back to a support and had on the prior Friday a kahuna, pocket pivot, viable gap up, something that said it was going to go up 3.02. Bottom fishing, interestingly, I only had one stock there last week, but to me a bottom fish is a stock that has Maybe it's a fallen angel. It looks like it's basing way below the 200-day moving average. I don't buy many of them, but sometimes I will. Here's one that was up 2.25. Leaders extended or gone. That's an interesting group to me because those are stocks that have had a long run, and we're getting long in the tooth, so I'm kind of looking for these to start to roll over as a sign that the market is changed. And you could see the ones that were long in the tooth were up 12 to 4, up 2.09, which is frankly is several times greater return than the S&P 500 was by itself. So slow move up, high growth stocks working. Then I want to get a sense of where the market is sitting, and those who've been here before know that I use EdgeRater. And just to go back to the PowerPoint, and I apologize for people that say, come on, stop this, you've done this 100 times. I know I have, but to me this is an important point. One of the things that Ian Woodward has taught us is to combine the best of John Bollinger, Dick Arms, Wilder, Darvis, Wyckoff, a number of the masters. One of the things, and what's interesting about Ian is that he was able to take John Bollinger stuff and actually get stuff out of it that John now has incorporated after he learned it from Ian. The Bollinger Band defines an area that the stocks will spend 95% of their time in between the upper and lower Bollinger Band. There's a mid band at 0.5, and in an uptrend, stocks are usually bouncing between 0.5 and 1.0, and a downtrend between 0.5 and 0. Occasionally, stocks will get above or below the Bollinger Bands. Now, if 95% of the time the stock is within the Bollinger Bands, then you can pretty much guess that if you're above or below, you're probably going to come back in. So I look for evidence of an extended stock, but also an extended market. So when I look at the S&P 1500, I find that 70% of the stocks are living above the midline. So that's what you expect to see in a bullish market. I'm a little bit concerned, again, long in the tooth market, when I see 14% of the stocks in the S&P 1500. So that is 190 stocks are above the upper band. And if I look at the top two, 80 to 90, 90 to 100 and above 100, I'm at about 38 to 40%. So this is a market where the majority of the stocks are at the higher levels of the Bollinger Bands. And so just by this, one would expect to have some risk of a pullback. Now, this is EdgeRater, and it's automated a number of different things that we've historically done, and EdgeRater has made it extremely simple. One of the things that EdgeRater built in this time was some of the morales and catcher things, such as around pocket pivots. So limiting to S&P 1500, by hitting that button, it's now going to give me in about 30 seconds more a list of what stocks in the S&P 1500 had a pocket pivot yesterday being Thursday in the market, and then viable gap ups. Now you can run this intra-market updating with Yahoo data, and you can get an idea intra-market where pocket pivots are and viable gap ups. It's a great tool to supplement HGSI for me. Now let's go into HGSI. Actually, let's look at TradeStation very quickly. And people know that I occasionally like to go into TradeStation and take a look at some of the elder signals on the indices. So this is the S&P 500. And I don't have to spend a whole lot of time here because everything will look the same. And what you should see on the S&P 500 is, and the others, we're in an uptrend, a green on the daily, a blue on the weekly, a green on the monthly. And in the way that elders taught us, when the impulse indicator, which is what I just looked at, is green, I could hold or buy. When it's red, I could sell or hold. And when it's blue, I can go either way. So I can buy or hold. I'm not selling when it's green, and it's predominantly green, blue, and green. Now, what's worrisome is we are at a nominal new high on the, well, frankly, it doesn't matter which one I put in there, but we're clearly at a new high on the S&P 500. Now, at the same time that we're on a new high, we have, and it's not seen as well on this one as some of the others, at the same time that we've got a new high, we are not getting new highs as we're getting higher and higher here, but the MACD is not getting higher as the MACD histogram, nor frankly, sorry about that, the lines are not getting higher and higher, despite the fact that the index is getting higher and higher. So we've got evidence of divergences here on both, on the MACD, and this will be the same, I forget that, on several different indices. And you notice, even though we got a new high, we're still below the midline on the histogram. There's clear divergences whether I look at the S&P 500, if I look at the NASDAQ, where we're getting higher highs and barely breaking even on the MACD histogram. So this market, by many means, is still moving up. It hasn't rolled over. I don't see sell signals, but what I see is a market long in the tooth with clear MACD divergences pretty much wherever I look. Now let's jump into HGSI. And people know I like to go into the warehouse view to start. And I like to open up, go down to the user groups, which are down at the bottom if you added all the things I asked you to add. In the add-ons, here's Major Markets Plus. Top-down analysis is purely technical, heavily weighted towards 1 week, the last week, but does include up to the last 3 weeks plus because of the force. And then I want to see what was moving on Friday, or in this case Thursday, and what's been moving the last 5 days. So Thursday, utilities and transports, mid-caps up, and what was down was volatility, silver, gold, and treasury bonds, iShares. If I look at over the 5-day range, I see that oil, interesting, oil and transports both be up. The oil, gasoline, transports, utilities, all were up big. Stocks were in the middle and underneath. Bad week for volatility. Silver, gold led to down. And interestingly, the dollar actually was down on Thursday, up 0.2 for the week, but it was one of the worst performing. The Dow, as the dollar does well, the stocks seem to go the opposite direction. So using the combo rank, just to review the combo rank real quick, this is one of the tools that we use to rank things in HGSI. And this combo is looking at 1-day price change, 1.5 weighting, a 5-day half rating, so it's higher on the 1 day. It looks at accumulation distribution, and it looks at 13 and 2-day force index. We're looking at price and volume going back a couple of weeks. So everything's price and volume related, and it's not just 1 week's time, which is why I like this, to look at the indices, but it is much heavier weighted on what happened most recently. So whenever I see utilities at the top, I know that that's not usually a good time for growth stocks. So kind of interesting that we had a good week last week in HGSI land. So I like to look at 4 or 5 of these. I like to start with the NYSE, one of my favorites because it's about 4,500 stocks, big, medium, and small, perhaps one of the better representatives of what the market is doing. And they're all going to look the same, so I'll spend a few minutes looking at this, talking about it, and then we'll just quickly go through the others. So if you haven't been here before, momentum bands on the top, bongos, force, the accumulation distribution in the middle. Green is good, red is bad. If the top one, which is weekly, and 13-day and the force are green, and the lower time frame one turns red, that's a sign of a pullback and an uptrend. I like that. Here's the high jump bar, which we talked about numerous times before. If you're a friend of Morales and Catcher, this bar here will pick up Bible gap ups. Recently went to a meeting, the professor's 1-minute guide to buying stocks. Very interested in directional movement, the DMI, so I've been playing with it to see if I want to use it as well. Candlesticks, pink is a pocket pivot down, blue is a pocket pivot up. The magenta is an 8-day exponential, the green is a 17-day simple, blue is a 50-day simple, red's a 200-day simple. Volume on the bottom and the one above the bottom In the not quite bottom one that has the red and the green bars, those are Eurekas and Phoenixes, and those are a sign of emotional exuberance on the NYSE. No matter what chart I have up there, these will be the same, and it tries to give me a hint of what the attitude of the market is. Green is bullish, red and burgundy, which are bearish. These down here are kahunas, and they're indicators of big movement, 24 or 40%, light to dark, up or down, blue up, red down, and it really gives me a good clue as to when something has changed on a specific stock, and it might suggest perhaps momentum. And if I'm looking for a reason to jump in, that pullback with the signal could be a kahuna. I've spent a lot of time on these in the past, so you just refer you to one of my older webinars. So here's what we're going to see on everything we look at. If I measure from the bottom to the close on Friday, I hope to see, I think 89 days and a 16%. Think about how many years in the last decade we've had a 16.2% return in an entire year. This is one quarter. So that should tell you a couple of things. Boy, are we moved out strongly. I hope you're in the market. And eventually we're going to have a pullback. But we got to wait for the signal. And do we see one? All my momentum indicators are green. The high jump bar, you see when it gets at the highest, the stock goes sideways and pull back. We're not at the top. By going sideways, we burnt off some of that exuberance. We allowed the moving averages to get closer to the price. If you look at pullbacks, here's one, it's 6 days and 2.5%. Here's a little deeper one, 5 days and 3.4%. Here's the last one, 1.3%. We haven't had a pullback. This is going back to November. We're due a 5 to 8% pullback. So if I'm at all bearish, it's not because this chart is telling me it's about to roll over. It tells me it's run way too far, way too quickly, and it probably needs to pause to refresh and could use a little narrow pullback. And a small correction or sideways motion here might long-term be healthy. If I look at the NASDAQ, and I'm going to go fast here because they're all the same. In fact, this is the NASDAQ, and it looks the same. You can see I did the same analysis earlier. 16.3% up in 89 days. If we look at the S&P 500, I haven't done the analysis, but you want to guess how much we've gone up? How about 16.9% in 89 days? And then look at these minimal pullbacks. Here's the deepest one we got, 3.5%. 3.0%. So we haven't had a substantial pullback since this mess back here in the fall, where we did get a 8% pullback. So that's our last 8% pullback, and that started in mid-September. NASDAQ, we've looked at. S&P 500, we just looked at. How about the Russell 2000? Was a leader, now a laggard perhaps. It's sort of, they all look the same. I mean, I can't say that this looks that much worse than the others. Red candle high, 24.7 to 89 days, so it's the big winner. But as you could see, it sort of seems to have peaked out over the last couple of weeks, trouble getting above where that line is painted right there. But it has been a big, 25% run since the bottom of the market in mid-November. Not too shabby. Let's look at volatility. Show you something that doesn't work. Right now, if you've been trading any of the volatility instruments, you're losing money unless you're short the VIX, not long the VIX. And you can see it had a fakie here in end of December with the fiscal cliff, and another pop here before the sequestering popped in, and we're still alive. But you can see it is just living down. If we look at a weekly chart, you'll see that although it's come up off the lows, it's really kind of, over the last couple of years, about as low as it gets. So when the VIX gets this low, that might be another sign that the market is ready to correct. On the other hand, It's been this low for a while, nothing's happened, so clear complacency. You look at the dollar is anti my stocks. The higher dollar gets, my stocks slow down, and you can see the dollar has had a nice run up. It got through the 200. In fact, if this was a stock, I'd say it was pulling back and setting up to run again. I'm going to watch closely the dollar because I have the knowledge that if this dollar continues to go up, odds are that my stocks start to pull back. Part of why gold is weak, silver are weak, is probably because of the move of the dollar. In fact, to keep with my standard, what I've done everywhere else, from its late January lows to where it was on Wednesday before it sold off on Thursday, a 22-23% increase on the dollar. We are definitely getting to a place, and let me change my view for a second, and let's try and get some more days in here. So you can see the dollar has been significantly higher in the past. These are UUPs. This area here, one would expect to have some resistance here if it continues to run up. The dollar is not my friend because although that's probably long term, I want to have a good dollar. My stocks go down when the dollar goes up, and the dollar certainly has had a nice move. Interestingly, what I just said may not be true anymore because my stocks haven't gone down with this dollar moving up. And for the longest time, a rising dollar was bad for my stocks. But perhaps there's been a disconnection between good dollar, bad stocks, and maybe we'll see evidence of a rally here that continues dollar strength and stock strength. It'll be interesting to see. Gold, silver, oil, real quickly. Here's gold. Is it time to buy gold? A lot of smart people I know would say it's time to buy gold, and that long term, all these printing presses that are going on in the market are not going to be good for building long-term wealth nor strength in the dollar. And so I think that tells me that there is some obvious. I think that gold is going to rally at some point. It's not moved much yet. It's moved off the low. I guess you wait. I'm one that believes that the inflation is much worse than being reported, and at some point, this $85 billion a month being put out by the Fed is going to come back to roost. Silver, another one, really at a bottoming area, but you need to have reason to buy it, not just that it's pretty low. Now, the fact that U.S. is sending F-22 jets to South Korea, the fact that North Korea is rattling the saber a bit, that could cause some grief, some increased volatility, and could also lead to a rise in gold. The interesting thing is maybe we, instead of sending F-22s and B-2s, we should just be sending Dennis Rodman. I'm joking about that, but I still think it's pretty funny that he went there on diplomacy on his own. U.S. oil, despite the dollar strength, this is kind of interesting. Oil's up. Everything is green. BMI crossover, pocket pivots, kahuna sandwich here with two good ones and one bad one. Is it moving up because the dollar's weak? No. Is it moving up because of growth? Maybe. Is it moving up because of concern about lack of supply? Maybe. Is it moving up because of concern of tumult in Korea? Perhaps as well. It's just interesting with the dollar strong. Oil has moved up. This is the strong season for oil, so it's not a big shocker to me. That's my note from seasonality. So that's my take on the market. I'm always welcome for criticism and disagreements. Email to me, and I'll bring them up on my next webinar. By the way, I'm going to plan on doing one of these live shortly. Industry groups, we have 146, and I'm going to go into the force 2-day up. So this is purely price and volume mediated. I only want to look at the ones, what movement over the last couple of days, what are leaders. The top one is an index, so that doesn't matter. But you could see the fastest moving groups are listed from the top. Big Pharma, I think this is a defensive play. Now, Repros is a stock that had some positive news come out this past week. I don't know if you noticed it has a de-accumulation. But, you know, it might be interesting to take a look at. Doesn't make money, doesn't have any revenue, changed on Friday. You could see a kahuna, volume, pocket pivot, viable gap up, DMI change. Don't know anything about the company except they had some drug with positive data, and biotech does this. You can see the group of pharma is very high, so that might be something to look at. The rest of these, I think, are all about defensive plays. This is not a LLUR by any means. It's sort of going sideways. DMI cross, everything green. This is Abbott, two kahunas. As you can see, it makes money, but with diminishing earnings growth. Trades at a multiple that's small at 7, pays a small dividend. These are safe stocks if you think the market's going to turn and you're looking for more than what you can get in the bank. These are nice. In fact, you can buy these and then write some out of money cover calls and actually get a real dividend return plus the premium. Pfizer, a little bit more of a lower left, upper right. All green, kahuna on Tuesday. Same story, not much earnings per share growth. And the story here, I think, is a 3.3% dividend. The next one was J&J. Looks a lot like the last one, except a pretty powerful move here. Now, is it earnings driven? I don't think so. Perhaps it's driven by a 3% dividend yield, PE of 16. Great companies historically. Many of the big pharmas have had some major generics losses. They call it generic cliff, and perhaps these things are going to start to move up. J&J certainly is a leader. One that I have a piece of is AbbVie, and I bought AbbVie because when Abbott split into this and Abbott, this is the growth business with Humira. And you could see, although volatile, some earnings per share growth in this stock. It trades at a multiple higher at 12, almost a 50% ROE, ROE to PE of 4. It's got to make Ian happy. He likes it too. And pays a 3.9% dividend. And as I said, I've got a position in AbbVie. So these are safe stocks. If you think the market's about to go sideways or pull back, the dividend is nice. Computer hardware, as I think about it, HP continues to get some interest of 6.8% over the last 5 days. Some of this is probably all about acquisition, splitting it up, value of the pieces worth more than the value of the stock itself. If you look at it, it's had a very nice run from back in November. So let's just figure out how much it has run. So you have your green candle low up to your high, and you've got a 108% change over 3 months, 4 months. So obviously a very big move in HP, frankly off of a bottom. And when you look at this on a weekly chart, it's not nearly as beautiful. In fact, it had fallen in the prior 20 months. It had fallen 73%. So even though it's had a big run, it's still got a long ways to go to get back into that 200-day moving average. So bottom fishing, something going on here, probably news related, something that you might want to read about and decide if you want to jump on board. I like the next one. It's 3D printing. This is one of the leaders. Both it and SSYS got clobbered with extremely deep pullbacks. 41% over 37 days, ending up in a red candle high to a green candle low at the 200-day moving average where it held, moving up again, got above the 17. My short-term target is to get up to where that 50-day moving average is. And you can see the group strength is turned up. Its high jump bar is pulled way down because it's sitting on the 200-day moving average, and it's due a DI cross over the next couple of days. So I'm probably too early in this, but I like BDD. So I usually go through my list, and let's see if there's anything I want to jump on. I want to go back to that one. Here's one of the ones I blew. I sold this thing at about 19, way too early. I got dismayed by the lack of earnings per share growth, and this continues to just be a horse. Look at this lower left, upper right. How tight could it be? I sold it when it popped on earnings, I think, here, and it came back. Just disappointing, just a blunder on my part. But at the high jump bar, although it's never a blunder to take profits, lots of volume coming in, all green, just no earnings per share growth, and that does bother me and my style of investing. That was Cray Computer, beautiful, beautiful, one of the best charts out there. Semiconductors all the way up to number 4. Here's a little tiddler. I think it's got a couple more bucks in it. Now, when I say tiddler, it's a tiddler. Had a 30% gain for the week up to $5.50. Average volume is 2 million shares. So $10 million is enough to buy the entire day's trading. So Manipulation City is a possibility. Kahuna, huge volume, everything's green, Bible gap up. Now, it doesn't look that impressive on earnings here, except it's got earnings. But if you jump yourself into MarketSmith, and you open up, let's see, sorry about that. %40 growth into 14.52 cents. It's worth 10, 12, 14 bucks. Maybe it goes to 8 quickly. If these numbers are fake, then it's obviously not going to go anywhere. And despite this, look at it's had earnings in the past. $8 was its high. So I guess that's probably where my near-term target is. And I am now long HIMAX after its Bible gap up on Friday. Anything else that I liked in here? A lot of things, here's Freescale. Everybody knows I like pullbacks. So here's Freescale, which pulled back to its 50, which in HGSI land we call free parking. What I'd like to see is something to tell me that it's time to buy, and that might be something along the lines of a Kahuna, a pocket pivot, a Bible gap up off this level. All would be very exciting. Also looking for tomorrow, if the market's up, to see a DI crossover. Back. Healthcare equipment, change index group. So Boston Scientific had a nice looking chart. Take a quick look at that. And I saw some good things written about Tech. So here's Boston Scientific. It ran up from 6 to 7.5. Doesn't sound like much, but that's a 25% gain. It's had sort of a double bottoming in a saucer pattern here. I don't think it's a cup and a handle. Maybe it is. Very quiet. Down across to the 50-day, which caught up. 2 Kahunas and big volume on Friday coming in. Something's happening here. Everything is green. Doesn't make much money. I'm going to go to MarketSmith just to see if it changes going forward. Something seems to be going on here, and not much growth in earnings to explain it. That's Boston Scientific. Anything else that I'd like to share? I mentioned Tech. Tech is interesting only in that it seems to be, here's my pullback, and now I got my signal ready to run, where it's had a pocket pivot and a Kahuna in volume coming in off of the 50, closed above the 50. Here's the group strength. Everything turned green, and this is one that I'm going to stick at my buy watch and consider this week. All right, back. Is there anything else I want to hit on this group? Now, people don't want to spend money, and they don't always go to HGSI meetings or the Greg Mills meeting because it has an expense. To me, these are my employees. My employees are my software and the education that I go to. Here is a stock that was #1 on several of my lists last week, which I got into before the week's end. We talked about the Greg Mills meeting on Friday. This is CPSS, and I think it's still viable. Obviously, a huge run. Nearly a triple, or has been a triple in the past year. Everything is green. Has had some major earnings growth come in, and just I go back to MarketSmith, CP. What is a stock worth that's going to have over $1 next year? Probably worth more than 12 bucks, considering its growth rate and its current PE. So, don't know if I like the business it's in, buying contracts, financial contracts on cars. At least you have something to go after if you're not paid. A bit easier than a house, but certainly making a big move, and looks like something, to me it looks very impressive. SLM, the chart was interesting. a pocket pivot, had a couple of pocket pivots and a kahuna, a nice run, another pocket pivot here. It could potentially be a stock to add to your position. My problem is the M. It reminds me of Fannie Mae and Freddie Mae, and this is Sallie Mae, which is student loans. And I don't know, with the current economy, I'm not sure if this is what I want to be buying, but I do like the pattern. It looks like it wants to continue running. Anything else here on the top 10 or so? Another group that might have something to do with the safety, and Metro PCS is what I want to look at. Sprint's been basing for a while. Looks like something's going on there, but this is one that interested me with PCS, where you can see a Bible gap up signal. Everything's green, strong group, kahuna, then above the 50. This looks like it wants to run. Good earnings coming in next quarter. Might want to check the news and see, but I like Bible gap ups, especially if there's been some, formation of a base. And really, this stock has been in a very narrow range going back for about 6 months. Like that one a lot. Back. Now, biotech, everybody knows it's one of the ones that I favor. So let me just go through the top 5 and give you my opinion. Biogen IDAC, what a monster. It looks expensive. It's probably not expensive. They had a huge approval of another billion-dollar product this past week, the first MS drug that you'll take by mouth. You could see earnings per share growth rate and PE are about the same, $9.50 times 24. I mean, not to say it's going to get that, but if it did get that, 9.5 times 24 is probably about $240, $220. It's currently trading at $192. So that's maybe a 15 to 20% run that's possible. I wouldn't be surprised to see its multiple growth. A monster stock, Bible gap up, have been going sideways for a while. Big move, lots of pocket pivots. Gotta love Biogen IDEC. Gilead, I've talked about this every call. What a beautiful lower left, upper right. Seems to be changing its color there. It's got earnings increasing. Hepatitis franchise is great. HIV franchise is great, and is buying a cancer portfolio. Amgen, don't really get this one as much. Most of its gain, I thought, was due to a change in CEOs. Looks to be running again. I suspect there's some good news on some of its early pipeline. I'm not aware of it. Celgene's been one of my favorite. If the market is good this week, it's going to go again. Based again, looks like it's going. Everything is green. Boy, would I love to see this one get a kahuna or a Bible gap up, especially since I'm very long on Celgene, as most people on this call know. Then lastly here, Regeneron had been a big mover, has gone sideways. So this is that pullback, ready to run on that 50. So you got the power of 3 with a 50-day, 8 and 17 all squeezing here. Group is up, a DMI crossover, a kahuna. I think this one runs this week, Regeneron. Look at the earnings per share coming in. So lots of interesting things on the long side. Let's go back to the industry group, and let's now look at what's not working. And you'll see home building. It's not what I wanted. Not what I wanted, but we'll just go down here and get it. Home building, coal, steel, gas exploration. But the most important thing is, to me, is only 10. Now, home builders, I don't know, maybe it's time to start thinking about them again. They've pulled back a lot. Take a look at a couple of these. You notice most of their 13-day courses are green, which means they're in uptrends, pulling back. Here's Lennar pulling back, sort of squeezing down here. At 42, still has great earnings per share growth. KB Homes, flattening out, hasn't pulled back much, going from a loser to a winner. You can see the earnings per share coming into this stock. Pulte Group also pulling back to the 50-day moving average. These have been good times to buy before. I just think this entire sector is setting up to come awake again. Ryland Group has had some of the bigger earnings per share growth. You see, like KB is sort of flattening, not pulled back much. Massive earnings per share growth coming into this stock. I think these are on a pause to refresh and not necessarily the end of the run. It depends whether you think home building is going to increase or not. I think it's still increasing, but it's subjected to month-to-month numbers, interest rates, and number of other things. All right, looks like we're at about 46 minutes, so we're doing much better than normal. The reason for that is because this is my retake. I didn't like the first take. The sound was horrible. So when I do it a second time, it's kind of like actually practicing, and you get much better at it. So I've now gone top down. So let me just summarize where I'm at. I think the market continues to meander until I get a sell signal. I don't see a sell signal. I don't see it having a massive run-up. And frankly, if I do see it starting to go vertical, then it tells me the end is near and we're having a blow-off. If I see that, I'm taking profits and I'm getting ready to position my portfolio facing short. We may continue this slow move up for some time. As I showed you earlier, we've had a lot of 2 or 3% pullbacks, but nothing more extreme. What's working for me has been pharma, biotech, and I think we saw here some of the things that are working. So now I'm going to back out of the program, and now I'm going to pay some respect to those that don't like to do as much as I just did. Jeff, how can I find what stocks to buy without doing that much work? So you just got the software, you put on the add-ons. I'm going to show you some tricks. Trick number 1, open up Warehouse. In the Warehouse, in the view, go up to where it says HGSI Strategies, Woodward & Brown, Reference Library, and let's just go to Scorecard, One-Step Demand, Dollar Volume. And let's go up to All Securities, and what you've just taken is 8,000 stocks down to 1,999. These are all stocks showing a lot of demand, and what you can do is rank them by combo here, and if you just look at these top 20 stocks, you're going to find some really good stocks to take a look at. Valiant is a big pharma. Well, it used to be a smaller pharma, but it's increasingly becoming a big pharma as it makes acquisitions. And you could see, wouldn't you like to be in this one? I've enjoyed this entire run. Actually, I've had it for a while. Everything is green. It makes money on earnings per share growth, trades at a multiple of 17, which is more than the other pharmas, but probably because it's actually had growth. Like this one, big fan of this. Visa, running again after a prolonged base. Everything turned green. Some earnings per share, not a big earnings grower. Virgin Media, I believe, is a buyout, so we're not going to spend much time on it. It's going sideways after the offer came in. J&J we've already looked at. Nice pattern there. Green Mountain Coffee, once a high flyer, had a Bible gap up back here and continued to run. Sometimes I wish I don't look at the names of the stock because I turned that one down, and it basically went sideways, touched the 50, had a kahuna come in, a eureka, and off to the running. Had another pocket pivot about 10 days ago, and has been behaving very nicely, certainly a recent leader. Chicago Bridge and Iron is another beautiful stock. A gap up with a kahuna and a pocket pivot on Friday. Looks beautiful. Is it too expensive? Well, High Jump Fire says it needs to pull back. Let's just take a look at CBI and MarketSmith, and I think you're going to see that there's considerable earnings coming into this stock as we go forward, and pays at a multiple of 20, and it's growing. You'll have $4 earnings in 2013. That equals about $76 to $80. That shows a lot of growth potential, and it's got earnings of $483 the following year. I think this is an interesting stock to look at right now as well. Go back here and see if there's anything else in the top bunch that we haven't seen. Fleet Core is just a beautiful stock, lower left, upper right. It's been a great stock. It has a multiple of 28, continues to run. It's a great stock until it stops being a great stock. You just don't want to be the last person buying. You don't want to buy the institution shares when they're selling. That said, It's had a beautiful run, and it's probably, in my mind, getting to the point where it's getting priced well. It might have some growth left. All right, so all I did here, and we identified a number of good stocks, was to put a scorecard demand view, which uses a combo rank and a filter identifying some of the best stocks in the market right now. There's that HiMax, there's AbbVie. Another one that I'm a big fan of, and if I had a stock of the week to pick, I probably would have picked this one. I just saw, where did United Rentals go? I own this stock, so keep that with a grain of salt. I've owned it for a while. I believe this is one of the stocks that will be a leader for some time. It's been basing now for about 6 weeks. Had a PMI crossover, everything green, pocket pivot on Wednesday, kahuna on Thursday. Look at the earnings per share growth on this. And let's just jump into MarketSmith. And you could see projecting $6 next year, 28% growth. Even with the same P of 15, 6 times 15 is 90. That's nearly a double from here. Big fan. You might get to see an expansion of its multiple as well, buying it in a pullback with some room to go. So the other thing that I do is I go into the designer and I look at some of the pre-planned groups. So the SMART groups have some things that are put here for you by HGSI as a, to help us get going. And I look at a couple of different things. I look under Morales and Catcher, and I might want to look at who had Bible gap ups. Here's our HiMax we talked about. Here's that repros we talked about. But you might want to be looking at, here's Biogen, some of these. Okay. I look at pocket pivots, and I might want to look at some of these. Again, some of the same names. Biogen, Greenbrier. Then I might want to go to Woodward and Brown and look at some of the groups here. Perhaps best of Woodward and Brown. The last several weeks, this has been the highest performing group over the next 5 days. AbbVie, Cray, HiMax, Valiant, all sitting here. Also, here's another one I sold too soon that I want to get back into at some point, which is Homeowner's Choice, which is an insurance for homes, I believe. And let's take a look at that, and you could see I sold it in here, which was a mistake, but I had bought it, and they had some profits in it, and it looks like it wants to run again, lots of volume, a big green candlestick. And this looks deceptive, like it's slowing down a lot, but if you look out a little further, is this a $40 stock potentially? I don't know, but it's one that I'm interested in nibbling at perhaps again. What else do I do? So these are some groups here. Let me point out some of my favorites. Best criteria. Again, a lot of these we've already seen. Berg 240, it's earnings, relative strength of group rank, at least 80, 80, 80. Strong EPS, relative strength of group rank, these are some of these stocks. Best growth stocks, HGS 100, leaders. So if my hypothesis is that a good stock gets on some of these lists, that if you get on lots of lists, does that mean you're a really good stock? So let's do a quick group inclusion filter. So what I'm going to do is I'm going to look for stocks that get on to a large number of lists. So let's pick those lists we liked. Let's pick the Bible gap ups, pocket pivots, best of Woodward and Brown, best criteria. I'm doing it wrong. My bad. Best of Woodward and Brown, best criteria, ERG 240, growth stocks, HGS 100 stocks. Already got my leaders. For EPS. Stocks and groups moving to the upside and strong EPS. All right. I'm going to make a user group from that. I only want the top 10. And we're going to call it Web Gems, take 2, 3.31. So it's going to search each of these stocks, each of these lists, look at every stock, count up how many times there are, and it's going to stick the 10 best, if there are 10 best, into a user group for me to look at, and then we'll say, no, not quite say goodnight. I want an index? No. No. So, Fly Leasing, CPSS we looked at, VRX we looked at, LL, okay. So these are the stocks that it found, and you can see how many groups they're in. So the 6 to 5 will probably get the groups that were 6 and 5. So if we go into HGSI, let's just quickly look at them. A lot of these are different, so let's just go into them real quickly and run through them, make a couple comments, and then I'm going to show you my list that I liked for the weekend and say goodnight. So Valiant, we've already looked at. Nice pharma stock, good growth. Virgin Media was a takeout. CPSS is that automobile financing company that looks great. FleetCor is a credit card for truckers and gas, looks great. Sinclair Broadcast Group, don't like the earnings per share growth coming in, has had some great earnings per share. SBGI, there's been others in the group that I like better, and I'll show you one before we say goodnight. Just writing them down so I don't forget. Something's going on in this sector, and when I see this here, 11, there might be some opportunity here as we've got some growth in earnings here, big 13 to 14, much greater than their multiple. Don't know this company, so be careful. But that group is doing well. Lumber Liquidators, another play on the housing market. Wood prices seem to still be up there. As long as housing is strong, this will lead. I think as long as housing is strong is the key. This is a REIT, so we're going to skip it. And then the other thing that's been strong, and I'll just show you a couple real quickly because I think this is the last one. Now, I'll come back to that in a second. CalAmp's a small stock, pulling back. Kahuna coming in. We'll see if it pops. I don't like the earnings per share growth going forward. Fly Leasing there are a bunch of plain leasing companies that made the list. 4.3% dividend yield, very teeny-weeny PEs. I don't know how to value these, but several of them made my list. But let's go back to this one here. So if you look at Canadian Pacific, Canadian National Railroad, these things are doing extremely well. And I think what's going on from all the oil sands, since we don't have things like a major pipeline like Keystone, you're having trains transporting oil, which is increasing revenue for anybody who's in the train business. So whether you're American Railcar pulling back, Pocket Pivot, Kahuna, volume coming in on Friday, I think this one's going to go. Whether you're Greenbrier, which could not get out of its own way, then American Railcar put an offer in, they turned it down, and they now higher than what the offer was. Here's Greenbrier, another construction. Looks like it wants to run again. Popped up the Bible gap up on Friday on a big order. Kahuna, lots of volumes. You can look at Trinity, been at a little bit deeper in its run, and you could see a big run here. So the guys that are involved in making the trains and keeping them on the rails are doing very well. And I think, let me make sure I covered all that I wanted to cover in my mind. Let me go back to my PowerPoint. We're at about an hour exactly, so I think I'm going to probably say goodnight. I'll look at sprinters. That's one thing I haven't done, and then I'm going to say goodnight. And again, my email address, if you have questions, comments, want to be on a mailing list for the next live event. If you want the video I just produced about how to set up the software, and I'll have a series of videos that will be coming out over the next 2 weeks on the different buttons, email me as well. And lastly, if I go back into, I don't want that, I'm sorry. The warehouse view, and I'm going to go into all securities. I'm going to go here into miscellaneous, sprinters. One step. This is a list now of 82 stocks. I took the 8,000 stocks down to 82, and these are 82 fundamentally and technically attractive stocks. Many of them are the same ones we've looked at. There's been some expansion of that. And at that note, I think I'm going to say good night. Good night, everybody. Have a great week. Oh, nope. False alarm. I want to show you two other broadcasting stocks that I liked a little bit more in Sinclair. Here's Lynn TV. You'll see a very nice pullback to the 50-day moving average, the kind of place I like to buy stocks at. What I want here is a kahuna, a pocket pivot, a Bible gap up, big volume, something coming in saying it's going to run. And then the other one that is more of a film studio is Lionsgate, and it gave us a buy opportunity last week, ran up again. The fundamentals going forward in the stock are just dynamite, and I think this one is early on in its run. On that note, I will say happy Easter, what's left of it, for the next 25 minutes. Happy Passover, and good trading. Jeffrey Scott saying good night. And in case you're wondering what the futures are doing, as we say good night, they're not doing much. There's some bad news in Asia, but it doesn't seem to be reflecting in some big sell-off, at least at this point. Y'all have a great night, and we'll see you next week. Thank you.